Ahoy, crypto adventurers! Today's session will be an ETH special, with all eyes on the volatile pirate of the crypto seas. Ethereum is known for its wild swings, and boy, are we seeing that in the charts. But fret not, we're going to navigate these stormy waters together. From support and resistance levels to how you can size your position smartly, we've got you covered. So, grab your compass and let's dive in. Let's take a quick glance at Ethereum's recent price movements across different timeframes. In the past 24 hours, we see a slight dip, with ETH holding around $2,380, a modest 0.94% drop. But zooming out over the past 7 days, Ethereum has risen by 4.72%, showing some short-term recovery from its lows near $2,273. However, over the last month, things look rougher, with ETH experiencing a significant drop of 8.96%. And yet, when we broaden our view to the yearly chart, Ethereum's journey shines. It's up nearly 47%, demonstrating strong overall resilience despite the recent volatility. It's clear that ETH, though volatile, is still navigating these waters with long-term strength. This means Ethereum has been experiencing some heavy waves with large price movements. If you're trading ETH, it's essential to understand that you'll need a buffer zone for stop losses because the market can swing aggressively. Shiver me timbers, with an ATR of 118, Ethereum is riding some massive waves right now. What does that mean for you? Well, it's time to adjust those stop losses, folks. If you're entering a trade, make sure you give the price room to breathe, don't get knocked out by normal volatility. Given ETH's volatility, it's wise to reduce your position size relative to less volatile assets like BTC. This means risking a smaller percentage of your portfolio in ETH trades to accommodate these large swings. For those setting sail with Ethereum, position sizing is your lifeboat. Given the swings in volatility, only allocate 1% to 2% of your portfolio per trade. That way, you can withstand some turbulence without your ship going down. The image indicates support and resistance using Bollinger Bands. Resistance zone, $2,585 to $2,600. Support zone, $2,230. Next, let's talk about the lines that ETH loves to flirt with, the support and resistance levels. You can see on the Bollinger Bands that the $2,585 to $2,600 resistance level acts as a ceiling, while the $2,230 area provides a cushion for ETH's falls. If ETH pushes above $2,600, there could be clear skies ahead. But if it falls below $2,230, prepare to batten down the hatches for a potential storm. Adjust your position sizes depending on where ETH is in relation to these levels. If ETH is nearing support, you might allocate a slightly larger portion, but still within the 2% risk rule, anticipating a bounce. However, if ETH is testing resistance, you might want to scale back or take profits to avoid potential downside risk. When ETH approaches $2,230, you might consider inching in a bit more. But if it's at resistance near $2,600, take profits or tighten your stops. Keep that position size balanced based on where the ship is headed. The image shows community sentiment as 81% bearish and 19% bullish. Bearish sentiment, 81%. The community seems to be bracing for more downside, and this pessimism could influence short-term price movement. Matey, the sentiment is grim, 81% bearish. This means many are expecting more downside, and we might see ETH struggle to break above that $2,600 resistance. When sentiment is this bearish, it's wise to keep a cautious approach. But remember, sentiment can shift on a dime. When community sentiment is overwhelmingly bearish, it might be time to lower your position size or hedge with other assets like BTC, which tends to hold better during uncertain market conditions. Here's where you shrink those position sizes and brace yourself. When everyone's bearish, it might be time to minimize risk, just 1% of your portfolio in ETH for now until the tide turns. Comparative analysis, ETH versus BTC, BNB, SOL, based on comparison images. Comparison images indicate how ETH is performing relative to BTC, BNB, and SOL. ETH versus BTC. ETH is underperforming against BTC, which indicates that investors are flocking to Bitcoin for safety. ETH's recent performance against BTC signals that it might take a backseat while BTC holds steady. ETH versus BNB. Binance Coin is showing about a 5% rise over the same period, signaling stronger momentum. BNB is riding the waves better than ETH. ETH versus SOL. Solana has also been outperforming ETH in certain periods, showing relative strength. In this pirate crew of cryptos, BTC is your steady captain, navigating smoother waters, while BNB seems to have the wind at its back. ETH? It's more like the wild card, lagging behind its shipmates. Solana also looks to be holding its own better than ETH right now. So, if you're looking to spread your sails, you might consider diversifying. If ETH is lagging behind competitors like BTC, BNB, or SOL, it's wise to diversify your portfolio across these assets. You can allocate a smaller portion to ETH, say 1%, while putting a bit more into BTC or BNB, which are showing better momentum. Diversifying your position is like hoisting multiple sails on your crypto ship. Spread your risk across BTC, BNB, and Solana. Keep your ETH holdings lighter to reduce exposure to the choppy waters. This image highlights the ETH-BTC ratio dropping below 0.04, the lowest level since April 2021. ETH-BTC drops below 0.04, this is a significant indicator of market preference. When ETH underperforms relative to BTC, it signals that market participants are favoring safety, BTC, over speculative plays, ETH. The ETH-BTC pair dropping below 0.04 is like a ship losing its wind. Historically, when ETH struggles against BTC, it means investors are playing it safe with Bitcoin. So, if you're heavy in ETH right now, you might want to keep an eye on this pair and consider hedging with BTC. The RSI chart shows ETH near the 40 level, indicating it's nearing oversold territory, but not quite there. RSI indicator, currently at 43, ETH is approaching oversold conditions, but it's not quite there yet. This signals that there might be some buying opportunities soon, but we haven't hit that key oversold level below 30. When RSI is close to 40, we're on alert. It means we're nearing oversold territory, but not quite there yet. If ETH pushes below 30 on the RSI, that's when you can break out your buy orders. Until then, keep your sails tight and be cautious. If RSI breaks below 30, it could signal an opportunity to increase your position size slightly as the market reaches oversold conditions. However, until then, it's smart to keep your position sizing conservative. Once RSI dips below 30, you might increase your position slightly, but don't go overboard. Stick to gradual entries and don't allocate more than 2% of your portfolio. To wrap things up today, remember this: Ethereum is riding some wild waves, but with the right navigation, support and resistance levels, volatility awareness, and position sizing, you'll make it through. This video is for educational purposes only and not financial advice. Always consult with a professional before making any trades. Remember, crypto can be a wild sea, so trade wisely. Diversify where necessary, pay attention to community sentiment, and keep an eye on ETH-BTC for clues. Above all, manage your risk and never bet the house on just one trade. That's the pirate code.